What's up everyone, it's Scotty with Money Investing. So markets here are pulling back a little bit on the first day of August, and August seasonality wise, we talked about in one of our yesterday's video that August and September are two of the worst months when it comes to the market. So we are certainly starting off with a little bit of a pullback, but in this video again, I'm going to break down the entire market. We've got lots to unpack with respect to the actual ADP numbers coming out tomorrow, Joel's numbers, the Fed's balance sheet, consumer sentiment, of course, not to mention the most important unemployment report, which comes out on the first Friday of the month. As always, if you enjoyed this video, find it helpful, make sure that you drop a like. Don't forget to subscribe to the channel. And of course, link to our Discord and Patreon is going to be down below if you're interested in joining. Of course, getting access to all the buy and sell alerts, options alerts, trade ideas, everything's going to be included, as well as the intrinsic value spreadsheet where we track and put together the fair values for a lot of different companies. So links are going to be down below. Of course, you get access to all the private members only videos as well. So this right here is going to be the update. So S&P 500 slips to kick off August down, not just a small gain after touching highest level in over a year. So JP Morgan's Kolanovich remains skeptical of the market rally. He says that he is skeptic of the market rally in a Monday note. Positive news on growth and inflation are fueling optimism for a soft landing scenario. And that's exactly right. With the labor market being super tight and inflation numbers coming down, we are seeing that soft landing scenario solidify even further, in which inflation returns to the target, providing space for central banks to ease. We remain skeptical of this outcome, however, anticipating the inflation decline to prove incomplete, leaving restrictive policies in place that should increase private sector vulnerabilities and, of course, end the global expansion as well. Equity valuations and multiples are not pricing in a soft landing, but rather a continued expansion, no landing, and simultaneously monetary easing, reduction of interest rates, and or quantitative easing as well. So that's according to Kolanovich is what the market are pricing in. Now there is going to be one wild card which I want to talk about, which is a potential for a recession. Now what we have right now is the labor market super tight. We've got inflation on its way lower, right? So when you combine these two things, that's exactly what the Federal Reserve wants. The best case scenario for the Federal Reserve, for Jerome Powell and the FOMC is unemployment stays where it is at 3.5, 3.6%, and inflation continues to come down to 2%. And 2% and it settles at 2%. That's the best case scenario for the Fed, for FOMC, even for the economy, for market participants. But as we know that, we can't just bank on the best case scenario, and we also have to understand the different probable outcomes in any market, any economy, any investment, any thesis that we may have. So I think the big wild card really is going to end up being recession, because inflation obviously is on its way down, unemployment continues to remain strong, but the key variable here is with the lag of all these interest rates, which is what the Federal Reserve has done over the last 12, 18 months, over 500 basis points, does that eventually affect the economy in any way? We've already learned about, the banking crisis, the credit crunch earlier this year. That was obviously, making markets very, very volatile. It was creating some more vulnerabilities. But the real question again is going to be how those interest rates actually play through the entire economy, and if that actually affects the labor market, the manufacturing, construction spending, unemployment numbers, of course, and just the state of the overall economy 6 months, 12 months down the road. That's the big wild card, and that's what we really have to understand, because if there is a recession, well, guess what? That is going to create some more pressure on earnings. That's number one, because again, if people start to get laid off more, they're not spending as much. As a result, companies are not making as much, and as a result, there's more layoffs, more compression in spending, earnings come down, and that's kind of like that cycle. But that also creates this probability for inflation coming down dramatically, because people are not going to be spending as much during a recession. And then that creates even more sort of chances or probability for the Federal Reserve to, once again, cut rates, do quantitative easing to support the economy and get us out of a recession, which obviously will stimulate the economy once again and will really create this environment for growth stocks and tech stocks to do really well. So that's really where we are. And when I look at the worst case scenario could be inflation that doesn't come down fast enough. And right now we're seeing it come down. We're seeing disinflation, so to speak. Some parts of the market we're seeing deflation, but there's two key variables now more recently that have come into account. Number one, oil prices. In the month of July, oil is up 14%, right? Crude oil. That's definitely going to affect gas prices at the pump. That's definitely going to affect a lot of different things, and we're going to find out how that affects inflation in very soon. In the next couple of weeks, we're going to get that CPI print for the month of July, and since July we saw crude oil prices up over 14-15%. That's going to be the big wild card. That is going to be very important. That's kind of fitting in our worst case scenario if oil starts pushing higher once again, and all the deflation that we saw from energy over the last 12 months since June last year is going to start to unwind a little bit and starts moving back higher. That's a big problem. Number two, food prices. Food prices are not in deflation, they're in disinflation, so they have been coming down, they have been rolling over, but now we know that India has also put export bans on rice, which obviously is affecting a lot of people worldwide and is pushing prices higher. I mean, I've been seeing videos, I've been seeing literally like on Instagram or TikTok, if you go there, there's videos of people literally climbing over each other in the US trying to get rice. That's how crazy it's gotten. Like it's insane that people, and of course even the companies are taking advantage of this. So there's a couple stores that I know that are Indian stores in the US that are charging like 5 times, 10 times more than what they normally would charge for rice because of these export bans. So now that you've got the prices once again for food, specifically for rice and wheat, going higher, and you've got energy prices once again on the move higher. So those are some things that could affect inflation here over the next couple months. So that's something that we have to obviously pay attention to. But August will also test the market rally. If history is an indication, we talked about the seasonality trends, and we learned that August is obviously the second worst month of the year, followed by September being the worst month. So I think that's going to be very, very interesting how the market kind of plays out here in the next 2 months. Now, PayPal still has to address the unaddressed investors' concerns ahead of earnings. So again, they are going to be reporting very soon. I've already done a video on PayPal. I do think that the valuation here relative to the price is far more reasonable than any other stock out there. So it's something that obviously we have to look into. But Morgan Stanley basically says that PayPal has essentially recovered to the levels last seen heading into the first quarter 23 earnings on the back of improving consumer sentiment and better e-commerce data points. However, we think that investors' operational organizational concerns remain largely unaddressed at the moment as well. So this right here is state of the market. Tesla here dropping, Amazon dropping, Apple coming down, Google, NVDA, energy sector, defensive, healthcare, utilities, financials, all sectors here pulling back. So pretty much the entire market was down. With respect to industrials, the only one that's pushing higher on the day. Over the last 1 week, we have seen comm services, cyclicals, industrials, tech push higher, but over the last 1 month, we do still have pretty much all 11 sectors in the green pushing higher. Volatility, again, wheat prices, corn, sugar, soybeans, then we got soybean meal, oil prices, silver, canola, gold, all pushing higher with orange juice, lumber, ethanol, we got Nikkei 225, all of them pulling back. Bitcoin just a little bit under 30,000 again, and Ether just under 1,900 at the moment. So we do have, like I said, the ADP numbers coming out tomorrow. We've got the actual jobless claims, of course, the Fed's balance sheet, and not to mention the actual employment situation. So unemployment numbers also are going to be coming out later this week as well. So going over to the markets, before we do that, Bitcoin getting a little bit of a bounce back higher after consolidating sideways. Support level is going to stay put at 28,300. So very nice move back higher. And Ether just trading sideways a little bit under 1,900. Support level is going to stay put at 1837, 1850. And of course, resistance all the way up to 1,900 to as much as $2,000 for Ether as well. This right here, again, if you take a look at gas prices in the month of July, this is the month of July, up over 10%, right? So that's what I'm talking about. I feel like this is something that we need to address because this is going to affect inflation. Oil prices are once again higher. So you can see that from June of last year, they sold off a little bit over 40%. Then they consolidated sideways. And this is the biggest monthly gain for gas prices since you have to go back to basically last year, since May of 2022. So in over a year, this is the largest monthly gain for gas prices, and nobody has talking about it. Like literally, if you go on CNBC, investing.com, nobody's mentioning crude oil prices creeping up to now over $80, $82 a barrel at the moment. So we are certainly seeing a pretty sizable move in crude. What is going on? So this right here is going to be that resistance level, right? So we'll continue to monitor whether crude gets rejected here or if you continue to see some more momentum back higher. And of course, next level is going to be $93, $94 for crude oil. That's going to be the next resistance if we continue to move higher. Talking a little bit about the S&P 500 here. So SPX continues to slowly and steadily drift higher, but we're seeing a bit of a pullback here on the day today. Again, we're kind of approaching this resistance at 4,600, 4,625. So we're starting to really just kind of, consolidate sideways. We're like drifting more towards sideways here as opposed to higher or lower. So really that's going to be an interesting level to watch at 4,600 for S&P 500. And of course, support level is going to be that 21 EMA sitting roughly at 4,500 down to as low as some of these levels at 4,450, 4,400 to watch for S&P. NASDAQ here, again, in a very similar situation. So resistance is going to be at 14,600. So this right here is going to be that level to watch for the NASDAQ. And of course, support level is going to stay put down 13,800 for the NASDAQ as well. We're seeing a lot of consolidation. So resistance is going to stay put at those levels. And again, down a little bit over 43 basis points on the day today. Apple here, again, getting rejected at 197. So that is a resistance that we have talked about for Apple. So again, continue to watch this right here. We're struggling at that level a little bit, but we do also have an ascending triangle, very, very small ascending triangle, where Apple obviously continues to validate that 21 EMA slowly and slowly kind of drifting higher, moving in that uptrend, and perfectly validating $192 is going to be that next support, all the way down to 177 for the company. Now, Amazon also reports earnings Thursday. I'll probably be doing a video on Amazon here very soon. Resistance is going to stay put at 136. We've got that 21 EMA sitting roughly at 130. And of course, if you do see a little bit of a breakdown below this level, then of course, $103, $104 is going to be that next support level to watch. So that is going to be that level and area to pay attention to for Amazon. Talking about Tesla here. And Tesla selling off a little bit. Again, just really consolidating sideways. It does seem to be forming a bit of a bear flag because obviously we have been selling off here. Now it's just consolidating sideways. Really just, trading in this range, I would say, for Tesla. So if you do see a little bit of a breakdown below this, I wouldn't be surprised to see Tesla in the 240s again. So $240, $241. So this right here is going to be that level to watch for Tesla moving forward, with the resistance staying put at 275 for the company. And of course, it hasn't really been recovered ever since earnings were released, and the margins did compress on a gross basis for Tesla. Talking about NVIDIA here, NVIDIA on the day just really trading sideways, 48 basis points, and of course 465 still trading pretty much at around its all-time high. So resistance is going to stay put at $480. Support level is going to stay put at $440 per share. So lots of consolidation sideways for NVIDIA. 21 EMA is still going to be that level to watch as a support. And of course, my fair value is way, way lower than where it's trading at the moment. 40, 45 times sales. You just can't justify company trading at these levels. Advanced Micro Devices seeing some momentum back higher. They reported their earnings with a 58 cents beat, and we got revenues coming in at $5.3 billion. After hours, they actually rallied a little bit over 2.6% as well. So very strong move to the upside. We talked about AMD in one of my other videos, and this is again another company that I do want to buy once again, but of course at better prices. So at low 80s is going to be that level to watch for Advanced Micro Devices. Resistance is going to stay put up to $130 per share for Advanced Micro Devices. So lots of consolidation sideways. Support level is going to stay put roughly around $107, all the way down to as low as, like I said, low 80s. The moment it breaks below $100 is when I will be looking at selling puts on this stock once again to start establishing a position in this company. Talking about PayPal, and PayPal here on the day up, actually down over 30 basis points, but well, like I said, it has value, it has potential. We do still have to wait for the earnings, of course, later this week, which is going to be actually Wednesday. It says after the bell. That's interesting. So I don't think they're reported yet. I'm pretty sure they are going to be reporting like either tomorrow. Actually, yeah, Wednesday. Wednesday is tomorrow. So like, isn't tomorrow Wednesday, right? Today was Tuesday, right? I'm all over the place, guys. It's just been, I've been on so many different time zones for the last couple months. Sometimes I do forget what day or time or what's going on. But yes, PayPal is going to be reporting, I think, tomorrow. So we're going to have, of course, a lot to look into, lots to unpack for this company. But resistance is going to be at $78. It's going to be in line with that 300 SMA. And of course, we got a very strong support at around here, low 70s. But like I said, the valuation is still relatively cheap compared to a lot of other companies out there. Square here down 2.2%. I think they also report earnings later this week, so that's going to be very interesting. And of course, we got a big resistance to watch at $83, $89. So that's going to be that level to pay attention to. And of course, support level down to as low as 70, down to as low as 50 at $59. It's going to actually make for a very nice swing trading opportunity if and when it actually gets down to that level once again. because I remember having a swing trading idea when it was trading in the low 50s for Square. Of course, from those levels, it has rallied quite a bit, over 40-45%. Talking a little bit about Meta platforms now, and Meta here, once again, pushing higher, up over 1.29%. So one of the outperformers on the day, back over 322. Resistance is going to be at $351. So this right here is going to be that level to watch, with a support in roughly at 300, low 300s for Meta. And right now, of course, we're seeing a lot of consolidation for the company. So 21 EMA, $303. That's going to be that support level to watch. Very nice, consistent uptrend. So making higher highs and higher lows. Resistance is going to stay put at 351, down to a support of close to $303 per share for this company. So Netflix here, pushing basically flat. So we have seen a little bit of a rally back higher from that support. So nice swing potential higher, and resistance is going to be 458. So this right here is going to be that resistance to watch. Valuation still a little bit more on the expensive side for Netflix as well. Very similar to what we have seen for NVIDIA, for Microsoft, for a lot of these companies. But that being said, support level is going to stay put at 410. Of course, that ad supported tier definitely does help the company's revenue and earnings potential over the next several years. The way they monetize that obviously is going to bring in more revenues at little to no cost for the company. So resistance is going to be 458. Like I said, lots of consolidation sideways. Support level is going to stay put roughly around here at 410 for Netflix. Talking about Google, and Google here also slightly down, 92 basis points, but getting bought up. So green candle on a red day for Google. This right here is going to be that resistance at 132, 133. And of course, support level is going to stay put down to 127 for the company, and resistance, like I said, all the way up to 131 for the company. Right now, they reported some very strong numbers. I already did a video on Google's earnings, and right now we're just seeing a little bit of that momentum back higher. So 144 is going to be that next target beyond 132, and we've got a little bit of a gap to fill for Google as well. Talking about Microsoft, so still consolidating sideways, not really moving all that much. So 336 is where it's at. Lots of consolidation sideways. Like I said, resistance at 351, support at 322, and valuation still a little bit more on the expensive side for me personally. So we'll be looking at, obviously sub 300 is when I can start to look into Microsoft a little bit in more detail. But for now, lots of consolidation and not really interested in this company at the moment. Shopify, again, consolidating sideways, so down about 19 basis points. So no price action on the day for Shopify either. Resistance is going to be at $75. We're seeing a little bit of that support validation at 66. And right now we're just kind of trading above that 21 EMA and just trading sideways, consolidating. Enphase Energy was down a little bit over 99 basis points, so this is under 1%, starting to break down below this support of 151. And again, this I wouldn't be surprised if it does sell off even further. Maybe comes down to that good deal area where we have been waiting for the price to come to us. And of course, we'll continue to be looking at that. Of course, I would be a lot more aggressive in dollar cost averaging at those prices for Enphase. But right now, support going to turn into a resistance here, considering that we are trading below that 151 level as a resistance. So hope you guys enjoyed this video and a complete update on the markets here. Bottom line is that we are going to be quite, we're going to be very excited, not only excited, but we're going to be very vigilant in terms of that inflation report that comes out here in the next couple months, a couple weeks actually, for the previous month for July, because that's really what's going to dictate, of course, where interest rates go, because oil prices very, very high in the month of July. Gas prices have moved up 10%, and food prices are also on the way higher. So those are things that I feel like have come into the equation with respect to inflation, and we're going to find out what that looks like in that July CPI print. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord, Patreon is going to be down below. The first week of the month is the best time to join if you want to join. Links going to be down below. Access all of our buy and sell alerts, option alerts, trade ideas. Everything's going to be included, including members-only private videos. As always, happy investing. I'll see you all in the next video.